Welcome back to Financial Market Insights for Traders. I'm Sophia, and today we're diving into something that's simple but seriously powerful. Let me ask you a question. Are you journaling your trades? No. Then this episode might change everything for you. Today's topic is the power of journaling, how recording every trade can boost your performance as a prop trader. And no, I don't mean scribbling down a few wins here and there. I mean a proper, structured, honest journal that captures the real story behind your trades. So let's talk about why this matters. Why a trading journal is essential. In prop trading, the difference between long-term success and blowing up your account often comes down to consistency and self-awareness. That's where journaling comes in. A trading journal isn't just a log of entries and exits. It's a mirror. It shows you exactly where you're succeeding and exactly where you're going wrong. Made a mistake because you got greedy? Your journal will show it. Started revenge trading after a loss? Yep, the pattern will be right there. Didn't follow your plan for the third time in a row? That's in there too. Now here's the thing. Many traders skip this habit, but the ones who stick with it, nearly all of them become better, more disciplined, and more profitable over time. Prop firms love it too. It shows them that you're methodical, coachable, and serious. What to include in a good trading journal? If you're going to do this, do it right. Your journal should cover more than just buy here, sell there. Here's what to record. The trade details: entry price, exit price, position size, stop loss, take profit levels. Market context: what was the setup? Was it trending or ranging? Any news events in play? Your reasoning: why did you take the trade? What made it valid based on your system? The outcome: did it hit your target? Was it a win or a loss? Your emotional state: were you calm, hesitant, chasing after a losing streak? This emotional piece is huge. Most people skip it, but that's where the gold is. Because when you start spotting patterns in your own psychology, that's when you take control of your trading. The benefits of keeping a journal. Let's break down the actual payoffs from doing this consistently. Number one, it reveals your strengths and weaknesses. You'll start to see patterns, like maybe you perform better during the London session, or maybe you consistently lose money on counter trend trades. These insights let you sharpen your edge. Number two, it builds consistency. A journal holds you accountable. If you've been hopping from one strategy to another or trading based on emotion one day and logic the next, it'll show. And once you see that lack of structure, you can fix it. Number three, it improves risk management. Many traders lose not because they can't find winning trades, but because they let their losers get out of control. Journaling exposes that. Maybe you're risking too much. Maybe you're letting losers run. You'll know exactly what needs fixing. Number four, it helps prevent emotional trading. When you review your journal and see how revenge trading wrecked your results 3 times last month, it's easier to stop yourself from doing it again. The journal becomes a behavioral checkpoint. And number five, it builds confidence. When you know based on data that your A-plus setups win 70% of the time, you'll stop hesitating. You'll trust your plan, trust your process, and execute with clarity. What traders often get wrong? Now let's talk about the common mistakes. First, being inconsistent. Only journaling the good trades. Skipping the bad ones? That's a mistake. You need a complete picture to see what's working and what's not. Second, being too vague. Bought euro to US dollar, made 50 pips, doesn't help you improve. Why did you buy? What was the setup? How did you feel? That's the stuff that matters. Third, never reviewing the journal. Logging trades is only half the job. You've got to go back and analyze. Set a time once a week, look through your trades, and ask, what am I doing well? What do I need to change? Fourth, ignoring emotion. This one's big. Most traders focus on entries, exits, and numbers, but forget about mindset. Emotional patterns are often the root cause of repeated mistakes. And finally, overcomplicating it. Your journal doesn't have to be a 50-tab spreadsheet with color-coded macros. Keep it simple but structured. Make it something you'll actually stick to. How to use your journal for real improvement. Once you've got the habit going, here's how to level up. Look for patterns. Are you losing money on Mondays? Are your afternoon trades more emotional? Track your metrics. Win rate, average risk reward, biggest drawdown, know your numbers. Watch your mindset. Are your losses coming when you're tired, stressed, or chasing a win? Refine your strategy. Use the data to tweak your entries, exits, or risk per trade. Let's say you notice that your breakout trades rarely work, but your pullback setups hit 70% of the time. That's a clear signal. It's time to go all in on what's working and cut the noise. Manual or digital, doesn't matter. Pen and notebook, Excel spreadsheet, or trade journaling software. Use what works for you. Digital platforms can be helpful for analytics, but the most important thing is that you actually use it consistently. Why prop traders need to journal? Prop trading is all about performance. You're managing firm capital, which means you need to prove your consistency, your discipline, and your edge. A journal helps you do that. It shows you're not just guessing. You're reviewing, adjusting, and improving. If you're applying for a funded account, having a well-documented journal gives you a serious advantage. It's tangible proof that you're not just lucky, you're intentional, systematic, and coachable. And if you already have a funded account, journaling helps you protect it, helps you stay within drawdown rules, helps you spot bad habits before they cost you real money or your funding. Final word, start today. If you're not journaling yet, don't wait until the next big loss to start. Get ahead of it now. Track your trades. Track your thoughts. Learn from both. Your journal is more than just a record. It's a roadmap to becoming a better trader. And if you're serious about leveling up and going pro, check out crystalballmarkets.com. They offer no-nonsense, broker-backed prop trading programs and a structure designed to help you scale if you're ready. But it starts with you. And it starts with that journal. Thanks for listening to Financial Market Insights for Traders. I'm Sophia, and I'll see you in the next episode.